Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, THEKOUK.com, and on X using the handle thekouk. Stephen, good morning. Are you still using X? I mean, I thought we'd all dumped X after last week's efforts from Mr. Musk.
I'm still using it, but with reluctance. And look, it's useful, and I tend to use it more for information rather than distribution of my views. I still do that a bit. But look, I follow some really interesting people, interesting news outlets, interesting sport, interesting wine producers, and I use it as an information source at this stage. But
Fair enough.
Messy.
Very messy. Look, we need to talk about last week's CPI before we get on to this week. What a number.
Oh, my goodness. I'm still reeling from that, actually, because it was in one way, it was only 0.2 outside expectations, above expectations. The March quarter inflation rate was 1.0% for the quarter, 3.6 annual. The underlying figure was 4%, so a couple of tenths above average. And just by the way, when the December quarter numbers came out 3 months ago, they were 0.2 below expectations. So
Right.
there's swings and roundabouts on these things. But we do know that things like education, services, mainly school fees and those sorts of things, we know that dwelling rent were the two super duper strong indicators that I think caught most forecasters off guard, and it confirmed that inflation, while it's still coming down, we've gone from, I'll use the headline figures, from 7.8% at the end of 2022 to 4.1% at the end of 2023, and now 3.6% in the March quarter 2024. So it is coming down, but the $64 billion question is, is it coming down fast enough? Is it still going to come down with monetary policy, both here and in around the world, without more interest rate adjustments? And the market's really having a rethink about that outlook for monetary policy.
Yeah, I mean, the idea of a September rate cut kind of is off the agenda now, because I'm sure the Reserve Bank will need a couple of decent CPI numbers before doing anything.
I think that's true now. If this number had even come in on expectations and the annual headline figure was 3.4%, and the trimmed mean, the underlying measure, was 3.7 or 8, there or thereabouts, I think they'd have been able to sort of look at perhaps the next one, and if we got another lowish number and the unemployment rate was edging high, they could have moved. But I think now the onus is really on this inability, I suppose, of the inflation rate to tick lower. And then when we look at things that we can see here and now, here we are, the end of April or near the end of April, and you've got oil prices elevated compared with where they were 3 months ago. Other commodity prices are up, not down. And they're the sort of things that, I think as we mentioned a week or two back, that do feed in to inflation around the world. And so that commodity cycle is something that's just another little, spanner in the works of getting this inflation rate back to target.
Okay, so I would imagine then every partial indicator from here on in becomes even more important. They're always important, I know that. But just because we had that surprise last week, things like retail trade and building approvals and lending data, which we've all got this week, they're going to be pretty closely watched.
Yeah, look, you're spot on. This week's data flow are more of these what we call partial indicators of where the economy's going. And therefore, I think they're all for the month of March. So we've got retail spending, as you said, and retail spending's been very choppy month on month for the last 4 or 5 months around that Black Friday sales in October and Christmas and New Year. They've been very, very choppy. But I think if we believe the consumer sentiment numbers, that it's going to be another soggy result. So about flat in nominal terms, which is pretty weak given the population growth. Building approvals, they've been horrendous the last couple of months. I wouldn't be surprised if we got a bit of a statistical rebound. All it takes is for a couple of big apartment blocks to be approved in Brisbane, Sydney, Melbourne or Adelaide or somewhere, and you get a bit of a 5% jump in building approvals. But we need that plus a whole lot more for there to be this correction in building approvals, adding to supply that's so desperately needed. International trade, we're doing okay. We're exporting well. We're going to have another trade surplus there, but nobody looks at that anymore, I'm afraid. The lending numbers, with the house price series still ticking up, people are borrowing a bit more to buy their housing. So we should have another modest increase in lending for dwellings.
Now, we're only 2 weeks out, 2 weeks, 1 day from the budget. You must be excited.
Oh, budgets are wonderful. Although in recent years, I've been a bit annoyed at various treasurers of all sides of politics because they tend to leak the really sexy topics before budget night. So you go in there, think, oh, what's the exciting thing? And okay, you get the bottom line budget deficit or surplus. You get a bit more of the economic news. Oh, they're forecasting inflation at 2.5 or 3.5 or whatever that number is. That's the thrill. Whereas in the old days, you'd go in there and, gosh, Keating privatised the remainder of Commonwealth Bank or Telstra, or they did something wacky on the capital gains tax, or, wow, those were the days. But now they tend to just sort of, I'll say leak, but sort of distribute the information so that when we go into the lockup in Parliament House, you think, oh, I sort of already knew that. I read it in the paper last week. But nonetheless, it's still an important document, but for both the economy, which is still pretty soggy despite this inflation persistence, and, of course, with an election about a year away from where we are today politically. So what will the Labor Treasurer, Jim Chalmers, do?
Stephen, enjoy your week.
Will do. Thank you.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.